Today we're going to look at Lululemon coming in at a $55 billion valuation, going for around $455. Year to date, the stock is down around 10%, but this company does have great fundamentals. The stock is currently selling near its all-time high, but if you ever get a chance to buy this stock during a recession or when the stock price falls because of some negative news, this is one of those quality companies that you want to hold for the long term. So let's go over the fundamentals and see why this is such a great company. Okay, so this is from the latest Jefferies announcements. They talk about how, looking at the trends for 2024, the firm sees cracks forming that could undermine Lululemon's strong position. And they talk about how they have stiffer competition coming out of Vuori and Alo. Both are experiencing significant gains in web traffic. They also cite an uncertain consumer environment that could weigh on sales growth for Lululemon. So it says right here, inflation and high consumer debt are beginning to accelerate and are impacting spending trends. So let's go ahead and see the current financials. So this is going to be quarterly data, and we'll see the trends. We'll see how Lululemon is performing and see if they are having a slowdown. All right, so we'll start with total revenue and earnings per share. So it looks like 8 consecutive quarters of total revenue growth year over year. So pretty much all of 2022, they did have higher revenue growth compared to what they did in 2023. You can see right here, the trend is slightly going downwards. They're only averaging around 22% in the past year of revenue growth year over year. So they're averaging 22% year over year. 2022, they averaged 35% in total revenue growth year over year. So definitely a big decline in the growth rate of Lululemon. When we take a look at earnings per share, it isn't consistent. There are some years where they missed earnings per share. The most recent reported, they are down 1.5% year over year, which pretty much no difference from what it was last year. Other than that, there is some huge improvements in their cash flow generation. When we take a look at cash flow per share and cash flow from operations, the most recent 2 quarters of cash flow generation have seen huge improvements. The latest reported $1.79 compared to negative 86 cents in October of 2022. That is a 308% increase in cash flow per share. And the previous quarter before that, July of 2023, that is an 800% increase in cash flow per share. So definitely huge improvements in their cash flow. So seeing a company with a good cash flow management, they could use that to return to shareholders. Cash flow from operations, they posted $389 million in cash flow from operations compared to $65 million in October of 2022. That is a 492% increase in cash flow from operations and also a 388% increase in the previous quarter before that. Cash flow per share and cash flow from operations, past 2 quarters in 2023, huge improvements. I also wanted to highlight this a little bit. It talks about the accounts receivable and the inventory of Lululemon. Basically, you want to ask, is accounts receivables and inventories growing faster than sales? If they are growing faster, if accounts receivables and inventory is growing faster than sales, then it's sort of a bad sign. That means they're not getting rid of their inventory. They're not flipping their clothes. When I take the average growth rates in inventory through the past year of 2023, they're averaging 19%, which is pretty much in line with their total revenue. So nothing too bad there. So as of right now, we're currently looking at yearly data now. So we're at yearly data. Latest is 2023. Some of the other positive highlights that I want to talk about. Outstanding shares. So from 2014, from 142 million outstanding shares to 126. So we're having a consistent decline of their shares outstanding, which is a good sign. They're either using the extra money they're making from cash flow from operations and they're buying back their company shares. If we take a look at gross profits from 2014, pretty much the past 10 years, they've been consistently improving their gross profits. So 50%, we are currently at a 57% gross profit margin in 2023. Net income has also consistently improved. They're making about $1 billion in net income in 2023. Another positive for Lululemon is they have almost $1.1 billion in cash with absolutely no long-term debt. Again, this is one of those great companies you want to buy when there's external factors affecting it. So just some of the latest news happening for Lululemon right now. So sales trends do remain balanced across the channels, categories, and geographies. They are currently trying to expand the menswear collection. The company is currently successful in introducing new products and styles. The company does plan to continue their product innovation, but mainly focusing more on men's footwear. So with their optimistic top-line growth, innovative product expansion, and strong international growth, there could further be upside to this stock. Lastly, they did issue a new $1 billion share repurchase program. Let me know what you guys think buying at this price at $449. Is it still a steal buying it at this price? with everything happening for it? Or would you guys wait till it crashes a little bit? Thanks for watching. Don't forget to subscribe. Let me know what you guys think.